Good morning, everyone. Hope you're doing well. So today we'll continue our multibagger series. In this video, we'll talk about an interesting strategy. The great king Raja Raja Chola employed the strategy called moat to find innovative ways to protect himself from invaders. So let's see how this is called moat. Let's see how Raja Raja Chola's secret strategy can play a very good role in identifying multibagger stocks. So let's talk about moat. So we'll cover what a moat is, why it is important for a company to maintain a competitive advantage over other companies, and build wealth over a consistent period of time. So companies like Page, Cera, Relaxo, all of them are examples. We'll talk about them one by one. So let's talk about moat. First, what is a moat? So you can see the picture here. So there is a castle here. It is fully surrounded by water. So similarly, there is another castle here. So any castle like this will safeguard you from attackers. If someone is trying to attack you, they cannot directly come in and attack you. So this castle will be wide and deep. The more wide it is, the more deep it is, the better you are protected against your invaders. So Buffett coined this term in investing. Whenever he used this term, he said that companies that have a deep, wide moat have a strong competitive advantage. They can maintain their pricing power. They can continue to hold market share and continue to grow, because of which they can become consistent, solid compounders over a long period of time. So it is something unique that keeps your company from competitors capturing market share away from you. So where does Raja Raja Chola come into the picture? So here you can see that the big temple was built by him 1,000 years back. It is still standing tall. So if you look around this temple and the palace of the king, so you'll see water body clogged around this place. So this is how he built a strong moat for his palace and temple. So around his castle, around his palace, a wide, deep, man-made moat was built with a lot of depth, with a lot of width. So it ensured that even if someone comes in and attacks you, you can still stay safe and make sure that you are protected. Your people, your assets, all of them are protected. Similarly, so this king has thought of this 1,000 years back. So he's one of the best when it comes to strategy. So this is something similar that companies have to adopt. Any company with a strong moat has multiple layers of protection, which can basically protect it from competitors. So competitors cannot capture market share easily. So you cannot lose your profitability. You cannot lose your business that easily. So you should invest in such businesses which can actually continue to become multibaggers. So let's talk about the type of moats. So there are different types of moats that a company can possess. So brand is one of the most important things. So HUL is a brand, Page is a brand, Cera is a brand, Relaxo is a brand. There are companies that have strong brand, which make sure that people are loyal. It ensures trust and loyalty. Think about Page. It is known for its popular jockey brand. Jockey is a brand that is synonymous with youngsters. Similarly, Royal Enfield is a very big brand. Second moat can be cost. So some companies have an inherent advantage of cost. So they can produce goods or products at a lower cost when compared to competitors, which can basically shield them from, but they can provide products at a lower cost but still maintain healthy margins. A third thing is network effect. So if your friends use a specific social media, you tend to use it. So long back, there was a social media handle called Orkut, which is now not extant. It has been shut down. Similarly, Facebook is not widely used these days. So everyone moved to Instagram. So everyone is forced to move to Instagram because your friends are there. So network effect plays a vital role in companies where peer-to-peer engagement is happening. Then switching cost. Switching cost is another mode which makes it difficult for customers to switch to a competitor. For example, banks or any tech tool. So banks, whenever you open a bank account, you keep it, even if you are not using it regularly, you keep it idle because switching cost is very high. You have to go and close it, closing formalities are there, and you have given your bank account number to multiple places. So money getting credited, even tax filing, tax amount getting credited, everything would be using that particular bank account. So it is not that easy to close a bank account. So switching cost is traditionally high. On top of it, you'll have your trading account, you'll have your transactions, you'll have your forex exchange, loans, a lot of things going on. So it's not easy to switch from one bank to another. The other advantage can be through regulators. So, for example, alcohol. So, not many people have the license to manufacture alcohols. Similarly, cigarette. Only a few companies can manufacture because they are the ones who have the license. So, in this scenario, a company like ITC has a huge advantage in compared to its competitor because the number of competitors is less. And even if you want to start something and compete against ITC, it is a long way. So, you have to get approval from regulators to start manufacturing nicotine based products, which is not that easy. So, because of this, some companies like ITC or United Spirits continue to enjoy a huge moat and competitive advantage. So let's see some of the modes in action. So as it is self-explanatory, Page is a premium brand when it comes to innerwear. So people associate themselves with Chalky. So it is high quality and it is highly reliable. So because of which, even though there are a lot of other products, a lot of other brands, the people are becoming brand conscious. Even though the price has been increased multiple times over a period of 15 years, people still keep purchasing it because of the product quality and the brand name. So though it has a very high price to earnings ratio, it continues to give confidence to the investors because of its long-term growth. Same is the case with Cera. So if you go and talk to distributors, retailers, or even people who are going and purchasing brands for their new house that is getting built, Cera is on top of the mind for everyone. So it has high quality reputation. It has a huge dealer network, which is again a moat when compared to others. So even the retailers try to sell Cera to you because it is already a huge brand, and people don't generally negotiate. It can be sold at MRP. So that is the kind of power that Cera and Jockey enjoy when it comes to moats. So whenever you look at a multi-bagger stock, you need to find out if there is a competitive advantage, if there is a differentiation, if they have a moat in picture. So why does moat matter? So a strong moat does not just protect current profits. It enables long-term growth. If you want to continuously build and create wealth, you need multi-bagger stocks, which has to keep growing. So that is why when you invest in a company for long term, moat is essential for any multi-bagger stock. Companies without moat, for example, commodity-based products, companies that are manufacturing commodity will never have a competitive advantage. They remain commodities, anyone can replace them, because of which they cannot be long-term play. They can be a cyclical play, but they cannot be long-term play. So that is where if you want to build a core portfolio for 5 years or 10 years, you should always focus on identifying companies with strong. There is one more company, which is Titan. Right from its watches, gold, bags, everything is popular. Everything is properly branded. So they again have a strong moat. They are trying to capture market from unorganized to organized. So anyone who's becoming brand conscious would purchase skin perfume, which is from Titan. fast track bags, Tanish gold, and Titan watches. So it makes sure that competitors cannot come and attack you. So you'll keep multiplying wealth through moat. So what are the problems? So even today, if you look at Titan, right, the last quarterly result was poor, and the stock corrected. Even today, the market is correcting, and it is trading a little less when it's compared to its 52-week high, but still the valuation is very expensive. So we tend to get confused. Should I purchase these stocks at a high rate? So is a high valuation justified? So the problem is if you keep missing out these companies, if you don't purchase these companies, you might miss out on significant long-term gains. So a moat is a company's competitive advantage, something that protects its profits and market position over a long period of time. Like I said, Raja Raja Chola's fortress made sure that this capital city was protected from invaders. Similarly, look for companies that have strong moat so that they can continue to grow constantly. So next time when you're evaluating a stock, think about Raja Raja Chola and his moat strategy. So ask yourself, does this company have a moat? Can it keep competitors out? Can it continue to thrive? So a business with a strong moat is not just another stock. It is a potential multibagger. It can actually create a huge difference in your wealth. It can basically change your fortunes from a lakpati to a crorepati is something you can become by investing in some multibags. So one stock, if you invest 5 lakhs, it could become 50 lakhs or 1 crore. But ensure that the company has a moat and continue to remain invested in companies with sustainable competitive advantage and moat. So thanks for watching. If you found this video helpful, please hit the like button. Please subscribe and let us know in the comment section what you think about investing in companies with high valuations but strong moats. Stay tuned for our next video in this series. Thank you. Happy investing.